The global economy is no stranger to trade wars, sanctions, and confrontations over economic dominance. However, a new and unexpected front is emerging in the ongoing US-China economic battle, one that could shake the very foundations of the global financial system. This time, the stakes are much higher than rare earth metals, technology, or smartphones. The battleground is gold, an ancient symbol of wealth, security, and economic stability. China, the world's second-largest economy, has reportedly begun preparing a series of drastic measures targeting the United States gold industry. These potential sanctions could include steep tariffs on American gold exports, ranging from raw material to finished jewelry, and in the worst-case scenario, a complete ban on U.S. gold imports. What appears to be a continuation of the trade war is actually a much more strategic, symbolic, and potentially devastating move by China to erode the economic power and influence of the United States. Gold has long been a cornerstone of the global financial system. It is the ultimate store of value, representing stability and trust. For decades, the US dollar has been tied to gold, and America has maintained an influential position in the gold market. The United States is not just a large producer of gold, but also holds significant reserves in vaults around the world. Gold is central to both the U.S. economy and its global financial power. If China succeeds in executing its plan, the world could witness a dramatic shift in this balance of power. The growing concern over this situation is being referred to as a golden decoupling. It's not just about tariffs on American gold or restrictions on imports. It's about undermining the entire gold infrastructure that has long supported U.S. financial dominance. According to reports from sources within China's Ministry of Commerce, Beijing has been quietly assembling an international coalition with countries that hold large gold reserves and those involved in refining. Their goal is clear: to slowly withdraw American gold from international vaults and gradually create an alternative system of gold storage and refinement that excludes the United States. For the U.S., this is more than just an economic loss. It is a direct challenge to its financial supremacy. Gold has always played a critical role in the global economic order. It serves as both a hedge against inflation and a reserve asset for central banks. For years, countries have held gold as part of their reserves to protect themselves from the volatility of fiat currencies, and the U.S. dollar has been the currency of choice for many. But China, with its rapidly growing economic influence, is now challenging that very foundation. At first glance, the idea of restricting gold trade might seem like a niche issue in the context of global economic warfare. However, when we dig deeper, the impact on the U.S. economy becomes much more profound. Gold production in the United States is not just a valuable industry, it is a massive, labor-intensive operation. Mining gold involves large-scale operations, including enormous open-pit mines and advanced chemical refining processes. Entire communities in places like Nevada and Alaska rely on gold mining for their livelihood. Thousands of people work in harsh, remote conditions to extract precious metal from the earth, and that gold represents a significant portion of the U.S. economy. China's decision to target this sector directly would hurt American workers and businesses. Companies like Newmont Mining, Barrick Gold, and Freeport-McMoRan, which dominate the gold mining industry in the U.S., would face severe consequences. Analysts from Bank of America have already warned that if tariffs are imposed, the U.S. gold industry could collapse under the pressure. The job losses would ripple through local economies in mining areas, and the stock prices of major gold mining companies have already begun to fall in response to rumors of these upcoming measures. But the damage wouldn't stop there. If China imposes tariffs or bans on U.S. gold, it could create a situation where the global price of gold skyrockets, benefiting everyone except the United States. Countries that have large gold reserves, or those who can quickly shift their trade into yuan-denominated contracts, would profit. Meanwhile, the U.S. would be left out of the gold market's upside potential, straining its economic stability. Beyond the immediate economic damage to the U.S. gold industry, the deeper issue lies in the role gold plays in maintaining global trust in the American financial system. The US dollar has long been the world's reserve currency, and much of that dominance has been built on the historical stability and trust that gold once provided. If China can successfully challenge US control over gold, it could lead to a broader reassessment of the dollar's role in the global economy. For years, countries have relied on gold as a safeguard against economic instability. The gold-backed dollar system that emerged after World War II, known as the Bretton Woods system, positioned the United States as the economic anchor of the global order. Gold reserves were the basis for confidence in the dollar, and the U.S. used that confidence to expand its global influence. But if China begins to create a parallel gold system, excluding the U.S., it could be a clear signal that the dollar's dominance is no longer assured. In fact, there are already signs of such a shift. According to Bloomberg, Chinese officials have been in talks with countries like Switzerland, South Africa, and the UAE to create an alternative gold storage and refining system that operates outside of U.S. influence. These moves are not theoretical, they are happening now. China has also been increasingly successful in encouraging countries to settle gold transactions in yuan, and the Shanghai Gold Exchange has seen a significant rise in yuan-denominated contracts. As of July, the share of yuan settlements in gold transactions on the Shanghai Exchange surpassed 40%, marking a historic shift that poses a direct challenge to the U.S.-dominated global financial system. This economic battle over gold is more than just a trade dispute. It is part of a broader geopolitical shift in global power. China is actively seeking to position itself as a new global economic center, and the fight for control over gold is just one front in this larger struggle. Beijing's growing influence in global markets is changing the balance of power, particularly in key sectors like energy, technology, and finance. In response to these developments, the U.S. has expressed strong opposition to China's actions. A White House spokesperson stated that any attempt to restrict America's access to the global gold market would be considered an act of financial aggression. Former President Donald Trump has also vowed to retaliate against China if the country moves forward with its plans. However, these statements are unlikely to be enough to deter China, whose economic power is growing rapidly. In fact, the U.S. may find itself in a defensive position, with fewer levers to pull in this economic confrontation. Washington has long relied on its ability to influence global markets and shape financial norms. But China's growing ability to build alternative financial systems, whether in gold or other sectors, puts the U.S. in a vulnerable position. For the first time in decades, the U.S. is facing a real threat to its financial dominance, and its room for maneuver is shrinking. If China succeeds in excluding the U.S. from the global gold market, it could trigger a seismic shift in the global financial system. The U.S. may no longer be able to dictate terms to the rest of the world, and the dollar's status as the primary global reserve currency could be at risk. Already, countries in the Middle East and Latin America are considering moving away from the dollar in favor of yuan-denominated contracts. In the coming years, more nations could follow suit, accelerating the process of de-dollarization. What happens next could have profound implications for the global economy. If the yuan becomes a legitimate alternative to the dollar, it could lead to a new era of economic instability, with investors scrambling to find new safe haven assets. Some may turn to cryptocurrencies like Bitcoin, while others might seek out new regional currencies or gold-backed systems. As these shifts occur, the traditional structures of global trade could begin to unravel, leading to new alliances, new economic blocs, and potentially new forms of financial warfare. For the United States, this is a moment of reckoning. The loss of control over gold, coupled with a potential decline in the dollar's global status, would have far-reaching political and economic consequences. The trust that has been the foundation of U.S. financial power is under direct threat, and if this shift in power cannot be managed effectively, the U.S. risks losing its position as the economic leader of the world. Gold has always been more than just a metal. It has been the bedrock of the global financial system, the symbol of trust that underpins all major currencies. As China challenges U.S. dominance in this sector, we may be witnessing the beginning of a new era in global economics. This is no longer just a trade dispute. This is the opening salvo of a new financial Cold War. The world is entering a period of profound economic transformation. Gold is just the first battleground, but the real question is whether the U.S. can adapt quickly enough to maintain its financial leadership. If China's plans come to fruition, the global financial order may be forever altered, and the U.S. may find itself on the defensive. The stakes could not be higher for both nations and for the entire world.